Okay, hey everybody. I apologize for that. There is this is my first sort of scheduled live stream, so it kind of got a little bit messed up here, but um, hopefully this works out and a few people see it. And I'll set something similar up for tomorrow, the day after, perhaps, and try to get this done right. Um, so let's take a look here. So I think a lot of people are going to watch the live or sorry the restream at some point. So I'm just going to get right into it and just talk markets. Let's talk markets. Let's go up here. So first of all, I'm Hans Albrecht. I was a market maker for 15 years, pro options market maker, and then an options income fund manager for another decade after that. So really kind of big on the options market making side, where for 15 years, I didn't make money unless I made money. So not some cushy institutional job where you get paid $200 or $300 or $400,000, and if you lose money, oh well, I'm a big shot trader. No. I didn't get a check. I went months without getting paid at times. That's where you learn to respect every single dollar. And then another 10 years just doing kind of income funds and really doing a lot of the stuff that people are very, very interested in these days, which is generating that additional income, that cash flow that you need. Maybe you need for retirement, maybe you need for some other reason, for a vacation, for whatever, child tuition, inflation, and so there's a lot of ways to accomplish that goal. So first of all, disclaimer: your trade, your responsibility, and you have to 100% agree with that. Otherwise, we'll see you later and hopefully be friends. But for now, if you want to continue, let's agree to that, and we'll go on to market musings. We're going to talk about what's going on out there. We have this relentless bid, which, if anybody out there has been following me, is quite simply something that I've been talking about for probably about a month now, just saying, listen, nobody's in this market. So we'll talk a bit about that. So we're going to set the stage for leverage, for volatility, for some interesting trades that we've been doing in certain programs in the community. So SOXL at 18, I said to scale in. I thought this was going to be a very, very big moment, a very big shift in AI, into inference, into monetization, into insight that kind of pervades throughout the economy. So this is sort of the big next leg of it, right? Think of this last leg, a couple of years of being very much about ChatGPT coming onto the scene, and then suddenly having this amazing chatbot, right? It sort of went from, your average garden variety chatbot to something pretty spectacular. I think we are taking a very significant move forward now with this next stage. So we're going to talk about some things today. Hated rally, right? Fear of missing out, and probably more appropriate for many people is fear of just not being in, really not being in at all. I know those are kind of very similar, but I think this is one of the most difficult rallies that institutional money, that smart money, has faced in a long time. So if you look at some of the data, I'll show you in a moment, a lot of people really got out, did not allocate on the way back up, and here we are with a very difficult prospect of underperforming the rest of the year. So that could add fuel to the fire. Not advice, but this is what I've been saying. We just keep getting this grind up. We get bad news. We come right back again. And that's really a reflection of what I'm talking about. A lot of people, this market is bid, right? People are sitting in there. And I think AI, number two, AI makes this next phase even more powerful, because people are going, we're going to miss this next leg, which we're going to talk about in a moment. Stability. So from a stability standpoint, we want to see that beautiful VIX futures curve. I'm going to show you guys in a moment. Don't worry if you don't understand what that is, but I'm going to show you that. Let's see if I can find it here. Let's go over to, not that one, not one. Go over here. You know what? I'm just going to bring it right up. Oh, there it is. My apologies. Okay, so here we go. We have got the VIX futures. If we get out of this vortex here, we've got the VIX futures very, very comfortable. I know a lot of people are saying, oh, the VIX has come down. Everyone's being complacent. We're about to crash. When you've traded volatility for a long, long time, like I have, you really understand that sometimes these periods of low volatility can be very, very durable. This is where you can get hurt on short-term protection. I'm not saying that protection isn't important. That's absolutely key as an investor and trader. But right now, the picture is very, very happy, right? So think of this shape, low front month volatility futures, well above the VIX and rising, rising, rising into the distance. So we're not going to spend a ton of time on that, but this is a happy picture. A sad picture would be this futures curve underneath the VIX, which is in green here, and downward sloping, right? So that means there's a lot of fear in the front end. Right now, there isn't. And that's really synonymous with the kind of market that we've seen, which is little sell-off, they buy the dip. Little sell-off, they buy the dip, and it keeps coming back. People are waiting for some of those bigger moves that we had in April, and they're just not coming, right? That is very, very familiar feeling for me, having done this for so long. So let's take another look at, so we've got the VIX futures really good. Rates are stable. So this is one of the things that I really want to watch, right? I want to make sure that we are, that the TLT, for example, and that those shorter duration bonds are relatively stable, right? If they're not stable, we are going to have some problems. And we saw a little bit of that in early April, where the bond market got a little bit scary. And that's when Trump had to step in and say, well, hold on a sec. I'm here for you. I'm here for you. So he kind of brought a put into the market saying, listen, the market can go down so much, but I'm not going to let it go down beyond a level that is going to start causing problems in the fixed income market, in the lending market, and things like that. So very, very important feature is that we now, that's part of why we rallied back. We have this bond put that is in place. And then Trump started flinching, right? It was, oh, you know, we're going to give you 90 days. We're going to talk about things. We're going to negotiate, right? He came out really, really barking loudly, but the bite wasn't as bad as the bark, right? So we're starting to learn that. And I think the market's sort of saying, well, we've seen this a few times, and we're going to probably not fall for it as much right now. So that doesn't mean something really bad can't happen. And we are always going to be prone to the latest tweet, the latest kind of Truth Social message. There is always going to be that possibility that we do get just a quick sell-off from something. So I'm just logging into I have to restart my whole computer. All right, so let's keep going. I want to show you guys, look at this. So when I'm talking about over the weeks, I've been saying, listen, people just aren't in this market. You can see equity positioning has bounced back a little bit in some areas, but is not quite anywhere near those highs that we saw, right? This is sort of that positioning. We can see 23rd percentile. So percentile just kind of describes, well, are we heavily long? Are we completely out of the market? Well, 23rd percentile is rather low in the range of what we would expect over time. So room to get back in. Here we go. Net leverage, right? So funds that use leverage, systematic strategies, hedge funds, really not back in, right? What happened in the sell-off? Hedge funds really got out. Foreign selling was huge around the world, but hedge funds really, really got out of markets. If that money needs to come back in, and we may be seeing that just kind of quietly kind of chipping away at this market, if that money needs to come back in, that's potential fuel to the upside. Here we go again. This is quite hedge fundy. I think it's a little bit higher right now, but look at that. We are way off those highs that we saw recently. We don't have to necessarily look further back, but we have a lot of room to the upside. So I think the point is that in terms of sort of thinking of a market that is really kind of over exuberant, really kind of over optimistic, we see quite a bit of evidence that it actually isn't, even though price wise, we're almost at all-time highs again. From the perspective of flows and money sitting and waiting for a sell-off, there's probably quite a bit of it. Here you go. We've got the CTAs. Those are systematic strategies, vol targeting strategies, which are strategies that buy when volatility is low and sell when volatility is high. They've delevered to a great extent, and they have some buying to do over time as well. And look at what's happened. Well, AI has kind of led us back. Mag 7 suffered for a bit. Here we go. AI kind of outperforming the rest of the market, breaking out here with gusto. And why? Well, look at this. Mag 7 EPS surprises, right? Magnificent Seven, the Googles, the Amazons, the Microsofts, etc. Google, I wouldn't say so much, but I mean, it is a mag, but maybe hasn't really been knocking it out of the park. But look at the surprises on earnings versus consensus. What does that mean? It's the same story we've been following for the better part of 10 to 15 years, which is that these companies are in control of making lots of money. And you can absolutely concede that they are in control of more and more of our lives, a bigger part of our world every day, whether it's social media or this new phase where they're going to be pushing AI into everything we do. So this is a fascinating time to be alive. And some of these stocks aren't expensive, right? Nvidia is not that expensive. Look at a stock like that. I mean, it's trading probably cheaper than like a Walmart. So it's a stock where I just it's having a little trouble versus the other semiconductors. We'll take a look in a moment. But yeah, let's do that actually. Let's take a look at some of these other stocks here. Let's go to the SPY. We can see the SPY just continues to just inch, right? It's a bit of a paint dry market, but what happens in a paint dry market? You often get kind of inching upwards, not inching sideways as much. You often get inching upwards, and that's exactly what we're doing, led by those mag names, those semiconductors and things like that. Let's take a look at IWM. Remember I mentioned rates earlier. Are rates important? Well, you darn tootin', they are important. Let's expand some of these a little bit. This is my MTI indicator, which you get with my programs. Look, you like lots of greens. You know, this is starting to look very, very positive. You got a little alert here that things were okay, and this is starting to shape up again after what was really a very difficult period, right? This indicator got you out very, very early. So this is one of the things that you get taught, and you actually get to keep in some of those in most of my programs. So QQQ again got you out pretty much near the top. S&P same thing, and here we are pushing for all-time highs, and I think we just keep going. It's going to be a triple top. We're going to probably have a little bit of trouble kind of in this sort of traffic jam range of where, you know, previous highs are always going to be a little bit of resistance because people remember that level and they say, well, you know, maybe I should get out this time. I didn't get out that time, and maybe I should get out this time. And so we may get just a little bit of kind of shake and bake shorter term, but longer term, I think we just continue going. And if you look at something like the SOX, which is a trade I'm going to talk about in a moment, we're going to go over some of our trades that we've been talking about over the last couple of weeks. Look at this breakout, beautiful breakout. I mean, I think this high is going to fall. And I think really we kind of have those old highs in mind, which is really part of why I've been talking about these trades that are actually up a ton of money. So it's good to see some people learning from some of the things that we're doing. So let's take a look at XLK. Beautiful, beautiful. Look at that. The XLK sitting right at the top there, right? The XLK, I believe, has a lot of NVIDIA, Microsoft, things like that. Of course, Microsoft's been gangbusters lately. They're really in all the right places when it comes to AI, and they don't have some of that baggage, the cockroaches that Google has, where it has to cannibalize its existing business to focus on AI. So Microsoft really in a beautiful spot, able to deliver AI value within their ecosystem. Very, very nice spot. It's had a good run. I mean, I'd love to see a pullback. We've been doing some income trades in Microsoft. Look at that. Again, new highs. Beautiful, beautiful shape after, you know, people were quite nervous for a bit there. And this is really the new leg of AI that's pushing into the ways that they're going to start to be able to monetize, right? They're going to be able to start saying, listen, you like our AI? We're going to charge you more for this. We're going to charge you more for these products that you already have. And guess what? You can't leave those products. Can you leave Microsoft Office? Can you get rid of PowerPoint and Word? It's hard to do, right? There's kind of a switching cost to learn. It's very hard to do, right? So when you have people in your ecosystem, it becomes very difficult to leave. And that's really one of the beauties of these stocks is that I can't see how they necessarily falter. Obviously, markets can go up and down, but they really are in the driver's seat in terms of taking over the world. They've got all the data, they've got all the money, they've got all the ability to really scale and become even more powerful. Scary to say, but it is. So the trade I talked about a few weeks ago, the SOX versus, so it's the SOXL, right? So the SOXL is the 3-time levered product based on the SOX, right? So whatever SOX does, SOXL is meant to replicate at 3 times leverage. So if SOX goes up 5%, SOXL should go up 15%. And you can see the two products as of a little while ago, this may have changed. I think this is maybe end of March, early April, probably end of March. Pretty similar in terms of assets, right? So how much have investors put into these things? Very similar. So interesting to see that, there's about the same money in 3-time levered versions of the SOX, which is pretty neat. I mean, people they want to go faster, right? The guy at the amusement park who asks everybody, "Do you want to go faster?" And everybody screams, "Yeah!" And I don't think you have a choice. You're going faster, but you are going fast with something like SOXL. Now, I don't want to get into this too much. I've got videos that cover this. I'm going to put those in the description afterwards. Hopefully, I can figure out how to do that. But the problem is a lot of movement in SOXX is going to lead to a certain amount of leverage decay, right? So it can kind of chop up the product. But what I said a few weeks ago when I talked about these trades is I said, this could be the moment. I haven't touched SOXL in 9 months, which was this very smart move because if I say so myself, because it was just, we had gone into a very long period of choppiness, of sell-offs and rallies and sell-offs and rallies. That destroys a product like that. So if you look at the chart compared to semiconductors, you can see the destruction in there. But when you get into the right kind of environment, and this isn't advice again, but this is what I saw, is that if you can start to get that momentum, it doesn't mean you're not going to get some sell-offs. That's part of the market. But if it's a relatively stable upward rising move, you're going to do okay being long something like that. So semiconductors, I don't want to get into this. Billions of GPUs are going to be needed. I just think we're in a whole new phase we're moving more into inference. Training is still going to be very, very big. Look at what the Saudis are doing, UAE. UAE is giving, I think it was UAE, they're giving AI to their people. That is so smart. They are saying, we believe in this so much. We think it's going to make every single person more productive in society. And that is an extremely heads up move. And you can bet that infrastructure for AI, whether it's GPUs and other things, Broadcom, the nerves, the spine, all these different parts that go into this whole stack of technology, there's going to be a huge demand for this. There's going to be a panic to get into these areas. I'm not saying stocks are going to be straight up, but the story, in my view, is exceptionally strong, and we are going to play it. So here's the original SOXL video from a couple of a couple of weeks ago. Oh, why do I have that? Oh, I'm missing my little thing here. That's too bad. My little thing. Anyway, you'll have these videos in the description if you want to go and look back at them. The idea was to sell. They're going to do a little bit of a turbo trade, right? So sell some out of the money puts to kind of finance, which I showed you guys, that really, really steep skew, beautiful, beautiful, expensive puts. You take that skew and you use that to buy cheaper calls. I'm not saying cheap. This is a volatile area, so you get a higher implied volatility, but I'm saying relatively you are getting this beautiful, you're being a market maker, right? You're taking advantage of pricing where it sits when you do one of these things in certain products. And so that's why I said, listen, you can sell those 258, buy 10 of the Jan 2026 23 strike calls, which are technically not a leap, but we have another trade to talk about that is a leap for around 255. And so this was a few days ago. We were up 50% on risk, right? They're trading around 385. Somebody in the chat said they sold some at 4. Terrific, 50% plus. And then you're up about 8%. That's got to be higher at this point. Let's go take a look right now. So these are the Jan 2026 SOXLs, right? So again, this is not for the faint-hearted, right? But what I saw down in here is I saw this is a new potential leg. It's going to come with potential volatility, but I can see SOXL really starting to regain some of these upper levels here and pushing. Now, remember, there's some of this loss is embedded, right? It's not, you don't get some of that loss back because of this leverage decay. However, that doesn't mean it can't go up. It just means that there's a piece of this. You can't look at this chart and say, well, I think it's going to get back to old highs because, things were here, things here were good and things here are equally good. This has an embedded value, almost like, think of almost like puts going to zero. You're not going to get that money back. But your long stock is going to continue to do well. So it's that kind of outlook, is that the idea is that we're going to be stable, which we are very, very stable. So compare it to this. This is when you don't want to be in a stock like this, right? That's why these are recommended for shorter term trades, or as I like to use them, which is I haven't used them since way back here in July of last year. I didn't want to be a part of this. As much as people love to get out there and sell options on them and on MSTX, I've told people it's not a great idea. You want to wait for stability. Maybe that's what we have at this point. So let's take a look at those Jan 2026 calls. And I said I'm adding, and I'm going to add on sell-offs, which I did, but I also added SOXL stock down in the 15s as well. Now we're up around 22. So nice trade there too. So let's take a look at those Jan 23s. They're 580 bid. So let's take a look. We've got in around 255s, 255, 580 bid, and the 12 puts we sold at 258. I think we actually sold them at 260 in reality. And the amazing thing is you were able to get even better pricing on these, because after this video, the thing pulled back, and I said buying on pullbacks. Even after that, you were able to get even much better pricing on these, much better pricing. But I'm focusing on what I put in the video. So let's look at the Jan 12 puts offered at $1.44. So those we sold at 260, $1.44. So scalping a buck on that. That's something where I'd probably at some point, this gets down to a buck, maybe 75 cents. I'm probably going to buy these back just to take that risk off the book, right? Because if SOXL does in fact implode at some point, and anything's possible, then below 12, I'm obligated to own it, right? And I could tell you right now, if it gets to 12, I probably don't want to own it, right? What gets SOXL down to 12 or 10 is a new picture, a picture that is maybe not as positive potentially. Now, it might be some sort of extraneous kind of influence, something happens elsewhere in the market and they just sell everything off and it doesn't really change anything for AI. That's quite possible too, because I think AI is getting to the point where it's not even cyclical anymore, right? It's not a nice to have, it's a need to have, right? Like cloud space for your pictures and all it's going to become a part of every business. And we're already seeing evidence of that. Goldman saying, what used to take us 6 weeks takes us, a day in some cases. You think Goldman's going to come out and say, we used to charge $20 million to do something like this for an IPO. We're going to give you a break now. We're saving all this money because of AI and we were able to let people go. And you know what? We used to charge you 20, but we're going to do that for 5 million. I'm pretty sure the smartest guys in the room aren't going to say that. They're going to say, we'll take our 20 million still. And guess what that means? Big, fat, juicy profit margin. So I think we could be potentially starting to see a very interesting reality for the S&P 500. Now, there could be other issues there somewhere down the line if you read between the lines here. But for now, I think there could be an interesting period of prosperity from a stock standpoint. And I do think eventually rates are going to come down. I think inflation's under control. Anyway, those are things to talk about another day. Let me see if I can find this darn. Let me see if I can find this silly thing. Here we go. Too many windows open. Window hoarder. Okay, So let's talk about, actually, you know what? Let's look at the other trade. We did another trade here. Oh yeah, right here. So we did a June 8 update. The original one was from, I don't know, like 16 or 17 days ago. And then we did an update on the 8th. And I said, I still like this. And I said, look, this is, in a way, the more semiconductors act well here, the more they're kind of a horse out of the barn, the more I kind of like this trade. Now, but there is the reality that there's the more of a chance that we're going to get a pullback, right? It's just natural that we'll get a little run, we're going to pull back. Right now, they're sort of insatiable for these things. That may continue because this is a very strong reality. So my mentoring students say, oh, it's too late to get in. I said, well, I told you to get in, but I say, listen, there's nothing wrong with kind of taking an allocation. For me, if I have 10,000 to put into an idea, do a third now and add a third on a pullback, add a third on another pullback, and don't be afraid. There's an old saying, good traders add to good trades, right? So, and they get out of bad trades, right? So one of the hardest things for all of us to do, I'm not pretending that I'm the very, very best at that, but this is something that you've got to learn when you find a really, really good trend, a really good story. It's okay to kind of lean into it because it's giving you the information you want, right? It's telling you things are going in your direction, right? That the story is unfolding in a way that you kind of expect. So here we go. This is the Jan 2026 24. Oh yeah, we didn't do the 2027. I did some of those actually myself, but the Jan 2026 24 with a 325 limit. So let's take a look at that. Because already it was underway, right? This thing was going. So what was that? The Jan 2026 24. So these are 535 bid right now. So the idea was, they were trading at 310 when I did this video, and I said, 325 limit is probably safe. So now they're trading at 585. So another really nice one. Now that's the single trade. Now, if you wanted to do the turbo, that again is the ability to kind of use some finance. It's going to cost you a lot more capital to do that, right? But you are going to be able to own something. You're going to cut down on the cost of that upside. So these are some of the things that we teach in the programs, things like that. By the way, I just started a 1-year pro Ivy League mentoring program. I'm Ivy League, so I know where I'm coming from a little bit in terms of the quality that's required. Terrific stuff, but not open right now. But I'm going to tell you about something that is open in a moment. Why Leaps? So we've got a new product. It's called Leaps Trader. It's not a new product, but I've reopened it. Leaps Trader and now Leaps Trader AI. So Leaps are wonderful. Leaps, in my view, are one of the great things out there in the options world because they bridge the gap between options trading and investing. You get the leverage that you like in options, but you don't have to deal so much with the decay, that daily decay, right? So when you're long short-term options, and I'm sure some of you have felt this, when you're long short-term options, you kind of need to be right, and you need to be right away, right? So that's kind of one of the things that you always have to sort of keep in mind with, let me take a look here. Am I still streaming? Oh, terrific. Hey, we got some people. Welcome, everyone. I don't think I can see the chat. Forgive me. I'm kind of trying to figure out this YouTube streaming thing. Here I am, Mr. Technology, right? Like I haven't got the pictures here. They're on my other videos, but I've written articles about AI and the warehouse robotics movement. I've covered this for a very, very long time. So I did a program at Oxford, an online program. It was like a 6 or 7 month program. So on AI, so lots of good stuff. And then again, I mentioned I'm Ivy League, so not to brag too much. But listen, Leap's a wonderful way, and and sometimes I tell people, listen, one of the great ways, Leaps kind of sounds fancy, right? Leaps, what the heck is that? Long-term anticipation units, right? Long-term equity anticipation units. It sounds complicated. It isn't. It's a long call just with a whole bunch of time left on it, right? So you don't deal with that decay that I was talking about, but you get the leverage. And in our Leaps program, our Hedge Leaps Trader, where we make money on hedging sometimes as well, and cash and cash flow in terms of poor man covered call, but done correctly. Actually, I posted a video this morning just for anybody. We'll have to learn how you use. Yeah, yeah. I know, Conroy. It's a little tricky, right? Technology, you got to keep up with it. I'll say that I posted a video this morning. I talked about the poor man's covered call, and I did a show last week. I do a show every week with Samantha Leduc, and she is phenomenal. She's off the charts, incredible. And so I feel fortunate to spend time with her every week, and we talk about macro and everything going on. And I said, listen, somebody brought me a trade. This is, you know what? I'm going to leave this for next time. Basically, it was a poor man's covered call, and I said, this is extremely dangerous if ASTS takes off. And you know that space stock? Guess what it did? It went from 29 to 39, and you would have gotten destroyed in this position. And I said, this is not doing the poor man's covered call the correct way. Unless it's not wrong, but you really need to be you have to have a plan and execute. And I have a better way to do it that doesn't require that kind of level of, most people have jobs. They can't suddenly react to some crazy move. So decay is lower. Option pricing can be inexpensive. I say, oh, hey, Pete from Finland, week in TLT leaps. Yeah, you know what? I picked up some TLT leaps. I'm not kidding you. That's a little unusual. Like I have a good amount of kind of, mag and some other interesting things in there. I just sold my NVO. It just hasn't been doing very well, and I'm just not sure. It's had a good rally, so I've sort of I'm moving things around a little bit, but for the most part, the portfolio is doing crazy. Our hood position is just killing it. So option pricing can be inexpensive. Now, make sure you understand the difference between cheap and inexpensive. When I say inexpensive, I mean right now relative to where option pricing has been over a long time. Sometimes those longer term ones can be inexpensive, right? I look for the ones that are. They're not always like that, but right now there's some interesting inexpensive ones. Now, that doesn't mean the option itself is inexpensive. Sometimes you buy a leap and it could cost you $100, could cost you $40, $50. So leaps, if you do them the way that I tend to do them in my portfolio, which is not like this, right? This SOXL trade actually isn't in the leaps portfolio. This was different. That's more of a, we're going to try to turn this into 10 times our money kind of thing. That's really using leverage to your advantage. The way that I do leaps in the leaps hedge leaps trader program is a little bit more leaps for an investor mindset. Now I'm going to be adding some fun stuff to it, which you can do or not do. Of course, everyone's welcome to do whatever they wish, but we want to have a little fun, especially if this. So here's your portfolio. Sorry, I blurred these out, but we're up 23%, 3% on the actual hedges. And you can see some of the hedges over here. So, and then 3.2% of that is actually cash flow, right? So it's growth, it's cash flow, and it's hedges. Now, I'm not going to tell you the hedges are going to completely protect you if the market falls apart. But we try to have hedges in there to take advantage. So what happened? We had a sell-off. We took advantage. We made a little bit of money on that, and now that just gets us back into bull mode, and we have a little bit of extra boost in there. So the program's open. Optionswithhans.com. Hedge Leaps Trader. We've had a really nice campaign in the last couple of days. I'm actually going to open it up to more people. I don't really want more than 25 people this time around, but I've limited it to people on the wait list, but I will open it up again, so you guys can check that out. This is the leaps, the specific leaps portfolio, up 7.59%, but it really hasn't been around for very long. And I just want to leave you guys with one more thing, because I know everybody's got things to get to. This week only, if you sign up for Hedge Leaps Trader, which includes Leaps AI, you're going to get, this is amazing, coupon for $100 off. So boom, full option bootcamp course, which I normally offer, Leaps Investing Advantage Guide, AI Super Focus List Guide. So we get, all the places that I look I'm looking to take advantage of this new phase of AI. And it's going to be some good stuff, right? So a Leaps portfolio, in my view, I mean, it can be a moonshot portfolio, but done correctly, I think it includes things like, I'll just be honest with you, Amazon, Qualcomm. We added Qualcomm in the last couple of days. That's starting to break out. Why? There's going to be AI in your pocket. There's going to be AI in sensors and Internet of Things. This is an underrated area of AI, and Qualcomm's really lagged. So already doing well in that one, but I think there's even still a little bit of room. Definitely still room in that that particular stock. Having said that, we've run up a lot in the semiconductors. Now, this is the big bonus. If you sign up, you're going to get my full Crush the Premium enhanced wheel with Hedging Course. I've been selling these for $7.99, $8.99 just on their own. So you get a full year of Leaps Trader, Hedge Leaps Trader, and you actually get this. It's kind of ridiculous, but I want this. This is different from Leaps, right? This is my income methods. This is the 1% and 2% monthly method, right? You learn a 2% method, but not doing the same thing all the time. So again, I'm going to cut this short, shorter than normal, right? I don't want this to go on for an hour and a half, but when I used to run about $750 million worth of these income funds, selling covered calls, doing cash secure put sales, things like that, using VIX, butterflies, some things like that. And I used to tell advisors, say, you know what? They'd say, oh, what do you like right now? And I'd say, I don't really like selling calls right now, cover calls. And they'd say, what are you talking about? And I'd say, well, I was a market maker and I understand where the edge is. So what you're going to find out there, look at JPM, look at the JPM caller. It's basically just a cover call with some downside protection. When we came out of COVID, it underperformed. It got run over on that upper call strike price, something like 7 out of 9 quarters in a row, not months. It got run over and underperformed the index in 7 of 9 quarters in a row. You have to know when to do one thing and when to do another thing. And that's what Crush the Premium will help you do. Because 100%, and I don't see this anywhere, 100%, sometimes the market is going to want to do the work for you. Right? Why do you want to be involved in markets? For the upside, right? Sometimes it's dividends, but you want to enjoy the beauty of capitalism, the beauty of America, of the greatest consumer in the world, of the greatest innovators in the world. All this money, by the way, leaving US assets, I think they're completely wrong. You want to enjoy that when it's doing some of the work for you. And when it isn't, you want to step up the income generation, right? So I'm a real believer in pivoting and doing the right thing. So you can check that out. Actually, you know what? I think I'm going to put that in the description too, because I've got a link for that. But anyway, I just wanted to bring this to you guys. I'm going to try to make this a regular thing, talk about markets. I'm not going to make it heavy on the pitch every time. I'm going to mention it, but I just wanted, because we're doing a big push this week and you're getting this incredible deal, I wanted to push it out there, get people excited. Look, what can I say? I want to sell you something, but I want to sell you what you're going to find versus me and versus other gurus out there who are mostly hobbyists, is you're going to get a little bit of flash, because I'd like to make this a real business, a bigger business over time, but you're going to get substance. And I think there's a great combination of those two that you can have to present to people. If I don't have some of the flash, you're not going to get great strategies and great approaches and great guidance, etc. And if I don't have substance, you're not going to stay, right? What's the old saying? Come for the veal, stay for the music. I don't know. Now I'm all over the place. Okay, folks. So everybody have a great day. Feel free to reach out. There's on the page, on the Leaps page. Where is that? Leaps Trader. Yeah, right here. Optionswithhans.com, Hedge Leaps Trader. On that page, if you're not interested, there's an area where you can ask questions. You can ask questions, and if you ask me a question, just know that I'm going to put you on my mailing list, which is the worst things in the world, right? I'm going to keep you informed about what I'm seeing in the world out there in AI, et cetera, et cetera. So thanks, everybody. Have an awesome day. And as if anybody, yeah, so Pete, I'm going to put the link right here. I'm going to put it in the chat. And I'm also going to have it, if this thing allows me to have a description, I'm going to put it in the description too. And if you like this, if you think you got some value out of this, from, learning about markets and all that, don't worry about buying something if you don't want to. But if you got value, tell a friend. I've been doing this a long time, and I love to what I'm thinking. I'm not always going to be right, but I really get a thrill out of markets. I hope you can tell. So have an awesome day, everybody. The link is down there, and we shall see you in the next show. Let's make this a regular thing and have some fun and learn something and hopefully find some great opportunities. Take care, everybody.